Gaby's mortgage lender that she's been working for. How long have you been in the mortgage business?
I've been in the mortgage industry for 23 years.
23 years. Wow.
Yep.
That's a very long time. So you've seen the ups and downs and the curves and everything that has happened in real estate.
Yes, and I'm gonna say I've been blessed to be able to go through those ups and downs because, of course, from every situation you learn
That's
so
right.
much. So yes, I've started originating in 2002. So I said 23. I think it's 23 or plus, but give or take.
Today we're going to be we're going to be talking about DPAs and 100% financing. And I'm with Gaby. She's going to be able to walk us down the 100% financing that's done through a mortgage. We're also going to talk about the DPA, the down payment assistance, and see what we can do, see what we can learn, and see if we can help any of our listeners that are thinking about buying a home in 2025, which I think is the right time.
Yes, and and I'd like to add to that is to provide clarity to our audience, because although it's a wonderful out there what social media has done and the turn it has taken worldwide, but there's also a lot of misinformation. So that's our main priority today, to try to clarify as much as possible, to try to get our audience and everyone that is interested in purchasing, and maybe they were not thinking about it, but once you if you add up how much you're paying in rent, you're going to be surprised. From my experience, that I think it's very rare that a person takes a minute to multiply how much they've paid for rent along, at least 10 years. That's 120 months. And the average rent now, at least in our area, is about $1,500. As you move up more towards like the Charlotte and Mooresville, I mean, I was up there about a month ago and talking to a few different people. The average apartment rent was about $2,400 to $2,500. So if you multiply that, let's just kind of, just do an average, because we've been through such a transitional housing market, and also as renters, if you average $1,200, how much is that over even 36 months? So that's something for you guys to keep in mind, and you'll be surprised once you see that number. You'll be like, $50,000, $75,000. But sometimes we really need to do that. Take that, just that 1 minute. I know we have so much going on, but you take that little minute, and it's kind of like a little wake up call, like, where's all this money?
That's right. That's right.
I thought I would add that.
No, that's good. That's good. That's why we're here. I mean, we one of the reasons I want to do this is to bring clarity to people that wants to go into buying a home, or they've been thinking about, or they have heard a lot of people say, "Oh no, it's super hard." It's always something negative about that. And seriously, what more negative it is that you grabbing that monthly rent payment, and just throwing it away in the garbage.
Right. And also, a lot of us grew up in a household where what we would hear was that our parents couldn't afford to buy a house because they needed 20% down.
Yeah.
So, and it's still to this date. So, so many, that's what they've heard growing up, 20%, and I mean, it's not easy to come up with 20%. So that's what we're here as well, to, let all of our audience know, all of your beautiful community, that, yes, you can buy a home. You don't need 20% down. And with these wonderful down payment assistance programs, you can go to closing with what you would need if you're going to rent an apartment.
That's right.
If I'm not mistaken, currently, with good credit, they're going to want you to put, of course, your initial deposit, your first month's rent, and your moving expenses. And if the average rent right now is, let's just say $1,500, how much is that?
Yeah.
$3,000 plus moving expenses. They're right there. You need $4,000.
Yeah.
And with these down payment assistance, it's possible for you to get to closing with exactly that same amount, if not even less, when you have an awesome realtor.
That's right.
That will, that will, negotiate. So but we'll get into that. Yeah. Sorry, I get excited.
No,
I get excited about, I love to be able to, provide everyone with this information, because everyone can buy a home.
That's right. I mean, even if right now, today, your credit is low, or you have to work some things out, reach out to one of us, and we're able to tell you and give you an idea of what you can do to improve your score, or improve your financial situation in order to get there to a DPA or get there to 100% financing.
It's maybe a silly comparison, but it's really no different from when you try to get your full license. Sometimes you don't get it the first time, right? But you don't give up. Right? You don't give up. I need to drive. Now I have a job, and you're gonna practice. So it's the same thing when trying to purchase a home. If you can take that step, or if you can make it right there and then. But if you allow us to guide you and you stick with us, and we'll hold your hand, and we'll make it. We'll get you there.
And probably it's not today or tomorrow, in a month from now, maybe a year or two down the line, but it's a goal that you set, and we'll see you through there, and we can all celebrate once you pass that step, once you go into your home, and we can give you that keys for your home. And I think that's something beautiful to look forward to.
Exactly. And I mean, Marlon, look, it's middle of February. Wasn't it just... weren't we just getting ready for the Thanksgiving dinner?
Right. I love Thanksgiving.
I know, I do too. Yes, we love Thanksgiving. But
who doesn't love Thanksgiving?
I know, but that's how fast time flies. I mean, 2025.
Yeah.
So it gets here faster than what you think.
I know. So now that you talk about DPA, and you guys are going to hear us talk about DPA. DPA is down payment assistance, and it's just the easiest, fastest way to say, before saying down payment assistance, it's just easier to say DPA. So now, tell us about DPA, and what is exactly down payment assistance, and who qualify in North Carolina?
Okay, so in North Carolina, there is a couple different entities that you can obtain down payment assistance. There is some counties that have their own down payment assistance. Currently, the down payment assistance program that I use the most because of the flexibility is through North Carolina Housing. It's a wonderful down payment assistance. It is $15,000 for a true first-time home buyer, or they can also consider somebody a first-time home buyer, or can fall into that category if they owned property, but it's been at least 3 years since they sold the property.
You know what? A lot of people don't know that.
Exactly.
A lot of people don't know that. I get that question. Oh, but what about if I own the house? I said, well, if you got 3 years under your belt with that house, you're good to go. You could use it again.
Exactly. So, as mentioned, it's $15,000, and those $15,000, they can either all be used as down payment, or depending on the sales price of the home, it may be that we can use $10,000 will cover that down payment requirement, and you have $5,000 that can be used towards closing cost.
Wow.
So that's beautiful. This program is wonderful. They're most flexible on there is income requirements. The income or the maximum income requirements are going to depend on the county and the amount of people living in the household. But, they are one of the most flexible, that will allow a household to have, I mean, really in today's economy, a decent income. There is some programs that are just, they're very, the limits are really, they're quite a bit low to what our economy is now. So they're kind of, we're like, you need to push them up a little bit more so
they're still a couple years behind.
Yeah, exactly.
Yeah, without,
Right. So that's what I do love about the North Carolina housing. And FYI, there's also a down payment assistance program for folks that currently own a home. So as long as, if let's say that you're wanting to upgrade and you decide and you're able.
One second. You said upgrade. That means if I have a current home that I want to upgrade to a bigger home, and I'm going to live on that home that I want to upgrade to. Let's say I have more kids, or my parents got elderly. I want to bring them in. I need a bigger house. That means that there is a program that could help me for down payment for that?
Yes. So through North Carolina Housing, they also have a down payment assistance program if you're going to upgrade. What's important is that this new property that you're going to purchase will be your primary residence. Okay, so that's what's important. And
hold on, that means I can rent the other one?
Yes.
That's another program.
Yeah, and that can help with your new mortgage. So, but I wanted to share that because there's, with the current changes and, in the last 2 years, especially with our economy and home prices and all of this, I've noticed there's a lot of loan officers out there that, because of all the changes, they've now started learning about these programs. I can very proudly say that since I started my career, I focused a lot in helping also my Hispanic community and their needs, and that led me to find these programs and learn about them. So many out there have only heard about the 15,000 now it's 15,000. It was 8,000 about 2 years ago. See, time flies. But there's this other program, and I'd like to share that that if you're a homeowner, there is assistance as well. Currently it's a 3% down payment assistance. So 3% of the loan amount, not the purchase price, but the loan amount.
Okay.
Yeah. So, but don't want to get it complicated here. But yeah, but it's 3%, and hey, that's great. You're not needing, if you were to be buying another, a second home or anything like that, usually you're going to be looking at, 10% down payment and all of this. So, yeah, so that's that. I'm sorry, I wanted to add that.
No, that's good. I mean, and that's something that a lot of people don't know, that there are options for if you want to upgrade to a bigger house. That there is that, and that's very good. So let's talk about in our area. I mean, me as an agent and you as a lender, you could lend in the whole state. And also I also can sell in the whole state. I'm licensed in the whole state of North Carolina. But let's talk about here what they call the MSA, which is the three major cities, which is Lenoir, Morganton, and Hickory. What locally, what DPA programs are available other than NC Housing?
Okay, so North Carolina Housing, they'll cover the whole state. We know that. What the cities that you just mentioned, we have a local program through Western Piedmont Council. Okay. And now on their end, as we talked earlier, the income limits are more strict. True first-time home buyer, and we can actually combine the Western Piedmont Council assistance, down payment assistance, with the North Carolina Housing. The Western Piedmont Council, they are more strict on the debt ratios, but once again, it just takes a little bit of putting all our thoughts together and see how we can make it work. But that would be our local, and it covers Burke, Catawba, Alexander, and Burke, Catawba, Alexander. I feel like I'm missing Caldwell. Yep, and Caldwell County. And once again, the Rick Oxford down there has done wonderful. He's been the director of that program for years, and so it's a very good program. The only little, I would say, with all the respect, is the only little hiccup is their income restrictions are much tighter, and debt ratios. But we try to work the magic.
Yeah.
And if it fits the the family, if it meets all the requirements.
I got a question. Let's say either the Piedmont or NC Housing is that help is that 15,000 or that 8,000 for when you upgrade, or that you said 16,000 for the Piedmont?
Yeah, so the Western Piedmont Council and please, the funds sometimes they can get exhausted or they can be reduced.
Okay.
So it changed towards last month. It's now, I believe it's now down to 16,000. So you could combine the 16 plus the 15 from North Carolina Housing.
But my question was this: do I have to pay that back?
Yes, and with North Carolina Housing, it depends on the years that you keep that loan. So, Western Piedmont Council, if you retain the property for 10 years, they will forgive 50%.
Okay.
So after the 11th year, you'll just have to pay back, 50%. Before I forget, it's the 16,000 or 20% if it's less. So they're gonna give you what's less depending on the sales price of the home. Okay. And that with Western Piedmont Council, so if you sell the house after 20 years or so, you're going to have to repay that 50%.
The 50%.
With North Carolina Housing, if you sell within the first 10 years or refinance before the 7th year, you will have to pay back those $15,000.
Okay.
After the 10th year, then as of year 11, they will waive 20%.
Wow, it's pretty cool.
That, right. So by year 15, you won't have to pay anything back.
Wow, okay.
Now, when it comes time to refinance, depending on, on the market, but if at the time of refinance, if you've gained enough equity, we can make it work to where you can, within your refinance, we can add those $15,000. That way it doesn't have to come out directly out of your pocket.
That's very, very
and
smart.
Take advantage of, that problem. Let's say that you're refinancing because, rates drop and you're also maybe wanting to reduce the term. Yeah. So all of that can happen as long as, the property appraises for, the required amount. You don't have to pay it directly from your pocket. But if you do sell, then, you do have to pay that. So, once again, I think North Carolina Housing is also very flexible on that. And it's important to also to know that it's down payment assistance, and that, these payments do have a repayment clause. They're not grants. Because many people get that confused, that it's, in this case, the two entities that we're talking in particular about, it's a down payment assistance.
Yeah.
Sorry, no interest rate, no rate, there's no cost as far as, you don't have to make payments, so there's no interest rate. So it's, 0 payments on that unless you're going to sell within the time frames.
So it'll be a second.
Right. Yes, it goes as a second. Yeah, it's recorded as a second mortgage.
Second mortgage.
Mm-hmm. Yep.
We can talk about that another time.
Bring the coffee pot, Marlon.
But I mean that is very good. And okay, so if there's down payment assistance and all these programs, Do people need to have money?
Yes.
Okay.
And, I know once again, there's a lot of miscommunication out there, social media. There's a lot of wrong, incorrect information in social media. So the reason why you do need to have some money is because you as the buyer, the borrower, me as a lender, you as a realtor, we don't see a penny of that money. Mm-hmm. So once your down payment assistance is approved, that money, the entity will wire that money directly to the closing attorney's office, or if it's an escrow company, which here in North Carolina we still use more attorneys. Mm-hmm. So we don't get, we don't see that money, nor can we obtain any money up front. So I'm going to enter more of your field, so please correct me if I'm wrong.
You're wrong.
Done. So whenever you find that, you find the home that you love, you're going to have to make an offer, right, Marlon? If your offer is approved or accepted, pardon me, the buyer's going to have to put some sort of deposit. Two deposits usually now, which is your due diligence and your earnest money. Mm-hmm. So you're going to need money for that.
That's right.
Right? I mean, because we can't tap into any of the down payment assistance money. So you're going to need money for that. And your appraisal, usually your appraisal is also, you'll pay that up front. And any home inspections that, the buyer will have, which we always recommend having, at least a home inspection, termite inspection.
Septic, if it has a septic.
It has a septic, well, all those basics. So, overall, being just very realistic and honest, it's important if you can at least have $3,000. For that, at least. Also, depending on your type of loan pre-approval, the programs can require that they want to see that the buyer has at least maybe 1, 2, or even 3 months in reserves. A reserve in this crazy mortgage world is basically 1 month of reserves equals 1 month of house payment. So right now, just talking about the basics, right, that your pre-approval does not require to show reserves. That's a number that I consider safe in our area. Now, now the closer maybe you're in the city, the higher the due diligence deposits, the amounts. So some kind of
multiple offers.
Right, multiple offers. Yeah, that has not gone away, by the way. That's still, so there's, you don't need money. I can, whenever I hear somebody saying that on a reel, I'm like,
no, you need money. The buyer is the one that's in contract with the real estate firm to pay whatever percentage they agreed on. Mm-hmm. So it's not the seller, it's not the other, it is the buyer and that firm that get into an agreement of a percentage, and that comes out of the buyer's side. And that's something that people don't realize, that this has always happened, but
now it's
so just to plug that in, just have that in mind. And that you can't use the funds for down payment assistance.
Right there, when the NAR situation happened, that it went into effect in mid-August last year. The very first ones that we heard from was, North Carolina Housing, and as of today, the down payment assistance will not cover the agents. The agents compensation. Now there is, I actually had a training yesterday.
And it's not the agents, it's the firms, because the contract is with the firm, it's not with the agent.
Perfect, thank you for that. And actually yesterday I had a training with the Charlotte House Charlotte and Dream Key Partners, and they actually they will allow
Really?
for that to be covered.
Very good.
Yeah, so that's so there that there. Just want to put that out there. But
And I know VA also changed.
Mhm.
And talking about another type of 100%, not DPA, but another type of loan like FHA, conventional, USDA, VA. Let's talk about loans, not DPAs, just loans that do 100% financing.
Right. So, your down payment assistance program, you need your umbrella, and your umbrella is going to be a conventional loan, FHA, USDA, VA, for example. So you have to fall under one of those categories, right, to get your pre-approval, and then the down payment assistance goes underneath, okay? But let's just say that, for X reasons, you don't qualify for down payment assistance.
Or you don't need it.
Right, maybe you don't need it. And actually, with the down payment assistance and current with our, the housing market now and all of this, actually, sometimes we can use it because they are more conservative on the debt ratio. So, 5%, currently it's 45% maximum debt ratio. And your traditional lending, conventional, maximum 50%. FHA, with a very good credit score, I've seen approvals up to 53% debt ratio. But sometimes a DPA with a lot of your housing, the cost of properties right now. Sometimes that's where it clicks, is the 45% debt ratio. So there is other programs through a conventional or FHA. I can probably say we have 100% financing through the FHA program.
Okay.
And this zero down program that we call. Difference between this program and the North Carolina Housing, for example, or your other entities, is that there's not an income restriction. All right. So if there's $200,000 coming in the home, perfect. That's not going to be an issue. As well as the debt ratios, they'll allow us to go up to whatever their desktop underwrite, it's called, the system that we have to run the files through. And another clarification, what does 100% mean? So 100% financing means that the loan program is not requiring you to put a down payment, but you still have your closing cost.
That's right.
And closing cost, speaking of our area, is in an average of about $8,500, probably staying below the maybe $280,000, but once you get up in the threes and more, closing cost in the blink of an eye is $10,000. So that is very important to understand, that 100% financing does not equal to not having to need a down payment. So what's important there is, once we talk to I talk to my clients about this, I tell them, please, when negotiating, ask your realtor to try to negotiate closing costs. And then again, it's not on the realtor in this market right now. Based on my experience, I'm going to speak, is really, it depends on the property. The window of opportunity to be able to negotiate. So 100% financing means that the loan program is not requiring you to put a down payment, but you have to cover those closing costs. And depending, this FHA program with 100% financing, it's beautiful. Credit score, it can be as low as 600.
Wow, that's very good.
Yes, and they do allow for what's called manual underwriting. So I know it may sound like, what is she talking about?
For more questions, call Gaby.
Yeah. So I guess I could kind of maybe put it as easy as, on your approvals, you have approval level A, right? And approval level B. So your manual underwrite would be like a approval level 2 or level B. But, that's accepted. They will allow seller to pay up to 6% in seller concessions. So that's very nice. You can purchase manufactured homes with that program.
That's a very good thing. But manufactured homes that are double whites, single whites too?
Yes.
Wow, that's very good.
Yes.
Very good.
There is certain restrictions, as we know. You got to make sure that it's really sticking to the ground. It has a solid foundation. Certain inspections when it comes to manufactured housing, but nothing impossible. And Marlon, will help you on that end of things. But that program, honestly, Marlon, it's really come to help a big chunk of our borrowers that, because of the debt ratios, cannot go North Carolina housing. It's just, by the time you add your property taxes, insurance, and all of that to your mortgage payment. So this program has been beautiful, and we are very proud to say with my lending entity that we have this program. Not all lenders offer this program. Then of course we have USDA, and as far as USDA, same thing. It's 100% financing, but you have to take care of your closing costs. USDA, you do have restrictions to the area, so the property needs to be in an eligible area. They have gotten more picky over the years. I mean, I've been using USDA for as long as I've been originating, but with all the changes in our industry now, is that you hear more about it, because more loan officers, lenders have had to explore, how can we help, right? How can we help our borrowers obtain their mortgage? So, but USDA, that is the one thing. Also, their debt ratios are pretty tight, and
the credit scores are also.
And sorry to repeat myself, but it's just our the prices and current market kind of made it a little bit harder. But whenever when the time comes that you find a property, if you qualify for, let's say that your doors are open to either the zero down program through FHA or the USDA, or we can use the North Carolina down payment assistance, working with me, I can tell you that I will review and see which one's going to be the best fit for you, what's in your benefit, right? So if you find a property and the property is on a USDA area and you qualify for that program, by Jiminy, if that's the best route, we're going to use that route. But once again, it'll just depend on what what loan category you fall into.
And if you're interested in knowing if a property is a USDA eligible, you could go in the website. I mean, you don't need to be a realtor. I mean, you can go in the website and there's eligibility map, and you enter the address and you hit search, and it'll tell you yes or no. It's very simple. I mean, you don't have to be a rocket scientist to do that. So, and I mean, I've closed USDA, and on last one I closed, it was like 45 to 50 days closed. It was a long time. It was a time of COVID. You remember that time?
Oh, yeah. They were taking, 10, 13 days. And, by the time, and, depending on the lenders, they have, their time frame. Fun. And then, so, and actually, pandemic times, you also have the situation where, let's be honest, sellers, and of course, being a good agent, I'm there to tell my seller what could probably be the best route. They were not taking anything if it wasn't conventional.
No, if it wasn't cash.
Or
cash too. Cash was king back then.
Really too,
Cash was king.
Wow.
Cash was king.
Well,
conventional was like Yeah, cash.
We just want
it.
cash.
Yeah.
Wow. So, conventional
I
or
heard.
cash.
I don't know. That's what I heard.
That's what you heard. Well, it was, if it wasn't, either one of those two, or on my side, I speak more for the conventional, because I would, the agent would call me, hey, Gabby, is there any way? And I'm like, honey, this is what it is, and this is what we can. So there for a while, it was hard to even consider if you could go. USDA was like, no, don't even. We can try FHA, but USDA because of the term times.
That's right.
So it's so that's what has happened with USDA. It's a wonderful program. It just has gone a bit. It's a wonderful program. It's just the times have changed so much in many different ways, that once again, at the end of the day, it's if there's multiple offers, if you have a conventional or a USDA, the probabilities of taking the conventional offer are probably going to be higher.
Yes, and that's.
But it's a great program. It's a great program.
And if you're at that point, I mean, real estate agent can tell you what it's the best choice to do, and that's why you need to have someone at your side to help you walk through there. And experience helps.
Right, definitely. Yep.
Do you know that in 2025 prices in Hickory has went up 5%? Yes. 5%. Yes. And we're still one of the cheapest cities to live in. Yes. It's affordable.
Yes. And I believe we are now either the 4th or the 5th place of the best places to live in the U.S. So, the amount of people that are moving to, our area is tremendous. And I would say that probably one of the top reasons why people will move here is because they want to be able to buy their home. Yeah.
It's more affordable. I mean, if people are working in Charlotte, we're 45, 50, an hour away. But I mean, if you find a property in Charlotte,
exactly,
the price you're going to pay in Charlotte, and on top of that, the taxes you're going to pay for Mecklenburg County, you'll be better buying somewhere here in Hickory, Newton, Conover, Lincolnton. There's so many choices that you can save. Got to talk to the right person and surround yourself with information. Information is always good. I mean, the interweb is very good, and the thing is that either you could get good information or bad information. So I would say, if you have any questions of anything that we've talked about, I mean, we talked about DPAs, down payment assistance, and we talked about your 100% loans. You didn't touch that much on VAs, and I think I love vets, and my brother is a vet. I have a friend of mine, a really good friend of mine, that is a vet, and I had a lot of friends that are vets, and to me, it's I don't think we do enough for vets. And if you're a vet and you're looking for a home and you don't have not even the closing costs, doesn't VA allows to roll up the closing costs into the loan?
Yes, with VA, what's going to be important is, I believe, depending on, you have to get a certificate. Yes. And also it's going to depend whether it's your first purchase, which is the, honey sweet one. And then if you are now maybe on a second purchase is when things start to move a little bit. But yes, I mean, VA it's a wonderful loan. Yeah. And once again, if you are eligible for a VA, and first and foremost, thank your brother and your friends for their service. It's a wonderful loan, and we'll look into all of that. And even one thing that we have talked about numerous times in our meetings and with, analysts and folks that have been, analysts in the mortgage industry, is that, and for the ones that we've been in this business for X amount of time, that we've gone to see all these changes, although with these changes, with higher rates, with home prices, now higher, but there had not been so many options to be able to purchase a home with, the least amount of money possible. We had not had all these 100% programs. So we got to look at the positive. Mm-hmm. So yes, we have these challenges, but then again, entities, Freddie Mac, Fannie Mae, they're all saying, okay, what can we do to help more people become homeowners? So it's not all, not concentrate on the negative, but look at all the positive. And that's one highlight that we continuously, hear in our meetings is, yes, rates were lower, such time, prices were lower, such time, but you either had, strawberry, chocolate, or banana or vanilla. And, now to have, the zero down program with 600, with a 600 score, as long as all the other factors, fall into place, FHA, as for the minimum 3.5% down payment, it can be as little as slow as a 580 score. I mean, let me tell you, I could probably say that if you walk into a property management, they won't lease an apartment to you with a 580 score more than likely. So
you have to put a lot of
or they'll ask you for like maybe like two deposits plus some. So take advantage of all these opportunities that the market has now. Trying to overcome the challenges that you and I and any of our community can. That it's not in our hands, right? But we just have to ride the wave and make the best out of it.
So now let's talk about 2025. I know we're in February, almost Valentine's. We're February 13th, 2025. What can you say, how competitive you think the market is today, or it will be for first-time home buyers?
It's a great time to buy.
Is it?
Yes, it is. It's always going to be a great time to buy.
Always.
Well, let me tell you, and I was, I had, by the way, folks, this podcast, which thank you so much for the invitation. And I said, hey, Marlon, Thursday's perfect because we have a big meeting on Wednesday. And I was, listening to our speaker with Freddie Mac. And, one thing here is that with the way the market is going, and we are going through a transition, right, in our government and everything. If you are barely, if you're kind of like, I think I can afford to buy a house. Let me tell you, if you wait, more than likely you're not going to be able to afford to buy a house next year. And the housing market, the prices.
We're not scaring anyone.
No.
We're not scaring anyone.
No. No, I don't know if this happened to you, but I'll share this. I received numerous calls back 2021, 22 pandemic times. And I was asked, Gaby, do you think it's a good time to buy with everything that is happening? And I was like, well, are you working? Yes, but my friend tells me that the market's going to crash in April. Well, many folks did not buy waiting for the market to crash. And they could buy then, they can't afford to buy now.
Right.
And now that $800 rent, speaking of our area, that we've been blessed with lower rents for quite some time. Now their rents are at least $1,200, $1,300. So it's always going to be a good time to purchase. Take advantage right now of the market being a bit more stable. we're not seeing, God, Marlon, what was it? Like literally, we were seeing properties going like, what, $40,000, $50,000 from month to month, if not more. You're the expert on that side.
In Charlotte, I mean, back in 2020, 2021, 2022, if you weren't coming in with $100,000 over asking price, you were not in the table. Wow. And there were some other strategies where if you were asking $400,000 for the house, I'll do, due diligence to be $300,000. Who's going to walk away from that? Right. I mean, there's no loan that can touch it, because I mean, they're saying, hey, you know what? We're not going to walk away. Here's a $300,000. Wow. Yeah. And it's just what the price of that $400,000 home back in 2021. See how much that home is right now.
Exactly.
Exactly. I sold homes in 2020, 2021 that today are easy.
At least twice,
easy, 50, 60 grand.
Exactly.
Easy. I want to be really conservative.
Right. Yeah, you're very conservative.
I mean, I like to be conservative. I mean,
yes.
But
yes.
50 to 60K.
Exactly.
Easy.
Exactly.
Easy.
So, going back to your question, the market is not going to wait for you. Like, to get your paperwork in line, to get your taxes in line. No, you need to get moving.
That's right.
And take advantage that we have all of these tools right now, all of these down payment assistance programs, because like I mentioned a few minutes ago, back, a few years ago, yes, home prices were lower or rates, but you did not have a lot of these options.
Yeah, no.
So you purchase now, interest rates, right? But the interest rate. Listen, if you continue to rent, you are paying 100% interest.
That's right. People don't understand that.
Right? You are so worried about, the interest rate is 7% or 6.5%, or how much are you paying? Right? You're paying 100% interest, because not a dollar, not a penny is going to come back to you whenever you leave that apartment or that house that you're leasing.
That's right.
And you might be lucky if you get your deposit back, but you might get a letter.
There's always a wall that has a scratch. There's always a toilet seat that's There's always going to be something.
A blind that's going to be $1,500 worth, right? Yeah, well, we can't give you your deposit because you had.
We love your property management, but I mean,
yes, but not. Yeah, but
I just heard there's a lot of stuff I heard.
Well, and really on top of that, I mean, the cost of maintenance, everything has gone up, so you can expect that. But it's 2025. We don't have the crystal ball. I like to say that. Don't come back and say, Gaby or Marlon said this. Even analysts, we've been going through such a big transition over the last 2 years. But what I can tell you is that if you continue to rent, it's 100% interest that you're paying. Yeah. Take the step. If it's going to cost you, in an average, to move in still a lower area, like in our area, that still cost of living is a bit lower. I mean, your average moving cost is going to be around $4,000. So before you make that mistake of moving to that next apartment or that next house, think about buying your property. Exactly.
Give us a call. I mean, I don't charge for questions. Do you charge?
No, I don't. No,
we don't charge for questions. I mean, even you guys want to go by the office, I mean, you could come by our office or here in Hickory, next to the license plate office on 321.
Yeah, perfect location. Yeah. It has such a great location.
And you could always stop by and ask, what's there for you, and we can help you. I mean, if we can answer something, we'll ask an expert about what's going on and what can help you. So I got 3 things that I think that it's my takeaways. I guess the first one is down payment assistance can help more buyers than they think. Down payment assistance can help. with NC housing, that's the one of the most common one I've heard, and it could help.
I've had I've had transactions, and I just when I'm sitting at that table and it's such a wonderful feeling. I mean, I've had transactions where with the good negotiation, with a good professional realtor and that cares for their clients, that at the end of the day they go to closing with no money because their deposit money covered what they were going to need for closing. And you're like, wow. And I'm like, sometimes I'm like, I wish I could just, if everybody could see this. So before you go out there and spend $3,000-$4,000 in moving to another rental, let's try to help you buy your home, because you truly can. And if maybe it's not your time right now, but give us the opportunity to guide you, and in the blink of an eye, really, in the blink of an eye, you can be ready to buy your home.
And I think it's the reason I started doing, I want to start doing this podcast, is just to bring information to people that they think there's nothing there for them. And there is. I mean, there's help, there's ways to do it. I mean, if you can plan something, you could get it done. So what I'm hearing is there for 2025, DPA still good.
So far, so good. We haven't.
For now.
Yeah, for now. And that's another thing. Thank you for, just that now. Take advantage of it now. And when
we're not scaring anyone.
No,
it's just
no,
what it is.
It's just, I mean, it's just the reality of things that, we have all these options now, but we can't speak for even 6 months or a year. So when I'm talking to a new client, I emphasize that, as of this moment, this is what's available. This is what's out there, because, you never know. So take advantage of these, great programs.
Just a recap, she also said that there's a program for NC housing that's, you can, if you're going to upgrade to a bigger house, there is a program for you also. Also, so what I also got is that 100% financing like USDA, VA, and the 100% FHA is available still in 2025.
Yes.
Okay.
And from my meeting yesterday with one of she's part of our company now, but she was with Freddie Mac for years, and she has connections with so many big people in the mortgage industry. And let me tell you, and they are they're putting their heads together, GSEs and everybody, they're all putting their heads together to see, what else can be done to make, housing possible, for folks. So, so hopefully we'll, maybe something will surprise us in a good way this 2025, with more additional programs that can help. There's another real quick, Marlon, but for those families that maybe, which is, I tell my clients when it happens, it's a good problem to have, when maybe you exceed the income limits or the area median limits. There is other programs that still, that can allow you to purchase with 3%, or once again, we roll back to this FHA zero down, because they have no income limits, and debt ratio just as a regular traditional.
Wonderful.
So that's that's wonderful.
And always call an expert. Call someone that's willing to work for you, because there may be a lot of people that want your business, but for other type of stuff. But I always want to be that person that is not going to help you to gain something.
Right.
I mean, I want to help people with information that it's going to help them today, it could help them tomorrow, and and being as honest as I can be. I mean, you can come to us. I mean, you don't have to use me. I mean, it's just it's what it is.
I mean, same the same way. If you give me a call, I'm going to provide you with all the information that that I have access to, and also based on my experience. We're always going to guide you in the best possible way.
That's
Just
right.
like, just like mom and dad, right? Mom and dad, don't take that route because they already went through it. They don't want you to go through that route because it could bring you something negative. So, we want to prevent you from those falls, and especially nowadays with, also the turn on deposits. It's not just earnest money deposit as it used to be prior to, pandemic times in our area. Now it's, your due diligence deposit, which is the reason that I really focus on advising my clients to take the true pre-approval route, which is having that file underwritten before you go out there and look for a house, because that due diligence deposit is pretty much, it's very minimal, Marlon, right? The reason why that deposit could be refunded, and and Marlon doesn't have, Marlon or myself, we don't have control of of that refund or how much money they're going to ask for. So we never want any of our clients to lose any money.
I know this is not the topic, but for anything is negotiable. Deposits, anything, just like the price is negotiable. But if the house is $300K, you're not gonna come and give them $100 deposit. They're gonna laugh at you, and they're just gonna waive that off. But not talking about that. that's another podcast. Yeah. And you know what? I think that the best time to buy is before the price go higher, because if you may want to wait for the interest rates to go lower, but guess what?
Home prices are going to go up.
That's right. And it's it got to balance out. So you put more here, the other one goes up. So now at the prices that we're at the correct prices that we're at, not saying that anything that's listed is priced correctly, but once you figure out the correct price of a property on today, February 2025, if the rates drop, like the interest rate drop like they did before, that property that it was $250 is now can be potentially $300, $350.
Right, because the demand is going to increase.
That's right.
The demand is going to increase. So
basic laws.
And sorry, I got to mention because you just touched on that. And on this my meeting that I had yesterday, once again, we don't have the crystal ball, but these are, your experts on this area. And now we have, just like we've been hearing, the housing is going to crash and this and that. Now with interest rates, right? Interest rates are so high. And let me tell you, this is what, what the experts are saying. More than likely, we're not going to see those 2.5%, 3% interest rates maybe in our lifetime, right? We don't know unless
we don't know.
We don't know, right? That's why I'm very careful with what I say, because I can't, I don't have the crystal ball, but it's very slim that we'll see that, right? Unless maybe another historic event were to happen, like the pandemic. But on that same little box is what's happened with, waiting for the housing market to crash or whatever. After, when 2009 came and 2010 and all those changes and, the recession and all of that was happening, well, as we know, the crash, and many lenders, went upside down and you name it. But due to that situation, agencies learned, like, okay, we got to make some changes. And that's where, all the changes in the lending industry came to where, hey, guess what? I do need to see a paycheck. I do need to verify that you are making this kind of money that you're stating on the loan application. But due to that, we've went through a pandemic, and I need your help on this because you're on that side of things. What was the foreclosure percentage?
Very low.
Very low.
Back when the numbers I heard, it was one. I think it was 1 million, 2 million, and from there the actual number that went out into the into the whole United States, the whole country, was 100,000 to 200,000, which
right. It's I mean
investors they were so ready for anything to come out that it would never hit the market.
Right. And I mentioned that because what happens from these events is, investors, entities learn from them and now come up with their strategies and whatever needs to be changed. So what happened is from that recession and that crash back in 2009, well, now they've come up with, they came up with all these new modifications, all these sorts of programs to prevent foreclosure, which they were not prepared for back then, which is, what caused all those, the unfortunate situation of all these foreclosures. So, don't get stuck on that train that, I'm going to wait for, the rates to drop again. It's just, you just have to kind of see where things are going.
That's right.
And that's why, you don't want to be stuck on, well, I'm waiting for these rates to drop. As of right now, they are expecting maybe that, we could see rates drop to a normal 5.5%, which was pre-pandemic. We were there, pre-pandemic, we were already in the fives.
That's right.
And that is just important for all of you to, to understand that, and don't get caught up on that train and not be able to buy your home, because, times change, and from every situation that happens, agencies, sit down and like, okay, this is, we lost all of this. Yep. We didn't take that into consideration. We didn't take that into consideration. So guess what? Now we're gonna, let's, reunite and see what needs to be changed. So we won't be in that same situation if this or that were to happen. So just wanted to, touch on that, because we have so many people that they are holding back from buying because of an interest rate. Once again, if you're renting, you're paying 100% interest rate. Right. Oh, and I'm like super conscious about maybe a 7% interest rate for my mortgage. But then again, your average credit card interest rate is what, 29% right now? So I'm paying 29, 28% for a credit card. But
and back 10, 15, 20 years ago, I mean, interest rate were over 10%.
Oh yes, definitely. So, yeah, my parents bought at over 10% interest rate. So it's with relative. The 20% down.
So I mean, it happens, and you just gotta break the cycle in your mind that you can't do it. If you have any questions, go ahead, reach out to Gaby. We'll have her information on there, and if you need a real estate agent or need to talk to someone, you can reach us. My name is Marlon Rodriguez with Mar Properties. What's your name? Full name?
My name is, full name is Gabriela Medrano, but people know me by Gaby. So Gaby Medrano, and I am here to, assist you with any questions.
And who you work for?
So Guild Mortgage. I work for Guild Mortgage, and I'm, very, very happy to be there, because they understand a lot of our market, and they're always trying to find a way to, be able to help everyone to become a homeowner. So once again, if you don't have to be like ready to buy, but it's good to know if you're going to continue to wait, perfect, but make your waiting time, make it worth its time. Yeah. Because in the blink of an eye, I can't say this enough, time flies. That's right. And it's better for like, okay, if I'm going to wait, but if I need to work on my taxes, if I'm self-employed, or if I need to work on credit, and we will guide you through all of that. Right. So if it's going to take you a year to maybe pay down debt, or if there was maybe any type of derogatory credit, make your time worth. Make it to where the next thing you know, you'll be like, oh, a year has gone by. That's right. And but I had my GPS, right? We use the GPS for just about everything now. So, you know, we can be your GPS to
That's
guide
right.
you into your home, you know,
That's
to
right.
becoming a homeowner.
That's right. And like I said, we're in February, and we could talk about next time where, you know, we'll be like, oh man, tomorrow is Thanksgiving again. And, you know,
Yes.
time flies.
Yes, time
Time
flies.
flies. So
Time
if
flies.
you have any questions, feel free to reach us, reach Gaby, and see what we can help you with. Thank you so much